Hi everyone, welcome to Thursday. Today we're going to take a look at Channel Infrastructure. It is a really good share in my view, and I really want to show you why and what I look for when I'm investing in the share market. Now, before I jump across and share my screen, I want to remind you of a Money Clarity Bootcamp that I have running starting next Tuesday, the 4th of August. It's going to be running over 3 Tuesday nights. It's just an hour each night, 7:30 to 8:30. It's free to join, but you're going to get so much clarity on your money and how to get ahead financially. We're going to talk about money systems. We're going to talk about how to set up some really good structures to know exactly where your money's going, and also how to pay off debt and a little bit on investing. If you want to end 2026 in a really strong financial position, this is a great place to start. So I'll include those links in the show notes, and I'd love to see you there. Like I said, it's completely free. Now, let's go and take a look at Channel Infrastructure. Remember, though, that this is for education purposes, definitely not personalised financial advice. Right, I've got Channel Infrastructure up here on the screen. And if you stand back and look at this chart, it is almost synonymous with the perfect share, if you like. We're starting down at around 84 cents on the bottom left. That was 5 years ago, and today we're up at $3.40. It's looking like a really good, solid performing share, which is what we want. Last week, it's closed up for the week, and because I'm recording this on Monday morning, it's already up a cent, negligible really, but it's up, which is great. Channel Infrastructure does pay regular dividends. You can see here that they're paying dividends, which is good. It's what you want to see for a share that is heading in this direction. Let's also go and have a look at the 1 year chart and just see what that's showing us. So on the 1 year chart, it has been performing really well. And like I keep saying, it is rising up, which is a great thing to see. We look in here, this second to last candle we can see here was Friday. The next one over is Monday's trading. So even though the market closed down, or Channel Infrastructure closed down on Friday from where it was on Thursday, you've got that long tail at the bottom, which indicates buying pressure, and that is a really good positive sign. Thursday's candle there, look how strong that was. That was a really good one. So it opened at the bottom, if you like, it opened at around $3.28 and it closed at $3.42, and that was the high of the day as well. So it's a really good, solid performer, Channel Infrastructure. It just keeps quietly ticking along. If I look down the bottom at these volume bars here, Thursday with that really good breakout candle was also up on the volume. Really good to see. Let's go and put our moving averages on. So I use the 30 exponential, and you can see there it's pretty much tracking it. We had a period here from about February through to about March this year where it did go below it. It went below that 30-day moving average again around the beginning of June, and then it's ran again. Now, that is normal. I'm happy to see a market that comes down to those moving averages. It's okay if it dips below, providing those moving averages are still moving up. And that's what you're actually seeing here with Channel Infrastructure. You've got more green than red. It's looking great. Now let's just go and put our 15-period moving average on as well and just see how that compares. And you can see that even though we had a period at the beginning of this year where the 15-day moving average crossed through the 30, it's still continued to run, and that is really good. And we are above those moving averages now, and they're both pointing up, and the share is rising as well. Let's go back to the 5-year chart, and you can see here it's almost a straight line when you look at those moving averages. They crossed in and around here, which was August 2024, and then it's just continued to run. It's been an absolute stellar performer. Now, a little disclaimer here, Channel Infrastructure is a company I own. Now, I bought it back in about October last year. So I would have bought it around where I've sort of got my cursor, which was towards the end of October, and look at the run that it's had since then. The thing is if I just zoom back out, even though it's had a really strong run up until October, I never entered it until then. So what I'm saying is that if you find a share or an indices or an ETF that is trending up, the chances are that it will continue to trend. Don't be afraid of entering into a share when it looks like this. We don't ever think that it's reached its peak. That's where stop losses come in. Providing you put in a stop loss, you will protect your capital. So if that share is at its peak and it is going to start to come off, that is where your stop loss will protect you. But also with a share like Channel Infrastructure, you can see that I didn't enter it until October. So it was through this period where I've sort of got my cursor there. Market came down a bit, but then it's rallied again. Yes, there's been days or weeks where the market has come off for Channel Infrastructure, but on the whole, it's kept running and it's had a really good trajectory. Let's take those moving averages off. Let's also compare it against the New Zealand market, and that's something I talk about as well. Because it's on the main board, we want to make sure that it's outperforming the main board. So over the last 5 years, you can see Channel Infrastructure has had an increase of about 310% over that 5-year period versus the New Zealand Stock Exchange, which has had a positive return of about 9.7%. That is something that we want to see as well. I like to see a share that is trading above the board it's trading on for at least 5 weeks, a minimum of 5 weeks before I will even consider it. So that is something that we want to see as well. Let's take these moving averages off. Now, I did mention about stop losses, and it is something I talk about from time to time. So if we just go back up to our search bar, we can type in ATR Trailing Stops. Now, I always use the 21 ATR period, and I always multiply it by 4 for the New Zealand market. Take out the buy stops, and we will just make our sell stops a lot better, a lot darker. And you can see here, so this was September. You can see that it started to rise. I entered the market in roughly October. Okay, so we had a bit of a kick up, and you can see even though the market came down for 2 weeks, and just zoom in. Market came off for 2 weeks. You can see the dotted line, it just stayed flat. Then it clicked up a notch and then it was flat again. And that's exactly what it's been doing. It's been looking like a bit of a staircase. And here we are here. So we're now at about $3.41. It's reached an all-time high. And in fact, over the weekend, I was able to increase my stop loss to about $2.77, $2.76 without going and having a look exactly where I've got it. And that is what a trailing stop does. It helps you ride a good performing share up. And each time that it increases in value, by increasing your stop loss as well, by using the ATR trailing stop, it means you're going to be locking in profit. It also means you don't have to worry about where is the top and should I be selling now, is now a good time to sell. Really wanted to show you that one with Channel Infrastructure. Like I say, it is a share I own. I've owned it for about 10 months now, and it is certainly in good profit. So that's what I wanted to teach you today. I hope you've got something out of that. Let me know in the comments. I love to be able to help you with your own share trading journey. And if there is a share you would like me to take a look at for you, let me know. Happy to do so. And remember, come and join the Money Clarity Bootcamp next week. You'll gain a lot of information from that as well. So until next week, take care.